dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
Happy New Year and welcome back to Liberty Nation Radio, heard coast to coast on the Radio America Network. I'm your host, Mark Angelides. On today's special edition, we are looking forwards into 2026. What is on the legislative agenda, what's going to happen with the midterms, and a whole lot more. Please remember, Liberty Nation Radio is sponsored by LibertyNation.com, where you can access podcasts, breaking news, analysis, and a range of biting and brilliant shows to whet your appetite for freedom and your fondness for the great American Constitution. And a Happy New Year to you from Liberty Nation Radio, heard coast to coast on the Radio America Network. I'm your host, Mark Angelides, and we're joined for this New Year's edition by Liberty Nation economics editor, Mr. Andrew Moran. Happy New Year to you, Andrew.
Happy New Year.
You sound happy. You sound like you've just landed in 2021. That's the level of enthusiasm he's got. And inflation is not happening. Inflation is happening, but it's mild. Inflation's here and it's huge, but inflation's great. That's the kind of 2021 attitude. But here we are. We're in 2026. And it's a whole new world. It's a whole new year. So, Andrew, I want to talk about what is going to happen and what might happen through 2026. And specifically, I think the first part to talk about for what is going to happen would be there are new taxation systems in place. And so there'll be a lower tax burden on the American people. Is this the big thing to look forward to in 2026?
Oh, absolutely. I mean, it's across the board. Low, middle, and high income households, they're getting tax cuts, and that's in addition to, let's say, the no tax on tips and all the other tax elimination of taxes or tax credits or tax benefits like the Trump tax accounts. Those are definitely positive. So you should start seeing higher real inflation adjusted wage growth throughout 2026. That is, if the U.S. economy stays intact and there aren't any consequences from the 2025 trade agenda.
Okay, so we've got the tax things to look forward to. There's also let's do a positive and a negative, and get through these ones.
Sure.
So on the negative side, there's a whole heap of American debt that needs to be refinanced, right? And currently, with the interest rates, and the FOMC meeting is coming up not too long away, so there might be a cut there, but there's a lot of debt that needs to be dealt with, right?
Yeah, so just on the Fed part, if you look at the futures market, investors are not expecting a rate cut until at least the April meeting, and the Fed forecasts only one rate cut in 2026. Now, when it comes to the negative, yes, about $8 trillion worth of debt will need to be refinanced at higher interest rates, so which means that the U.S. federal interest payments will be firmly above $1 trillion again heading in throughout the fiscal year 2026 and heading into fiscal year 2027. And of course, national debt. I mean, that's going to be $39 trillion soon. And then, it took, look at it this way. It took the United States 200 years to accumulate its first $1 trillion. Now the federal government is accumulating $1 trillion every couple of months, every 3 months, maybe. So these higher debt payments are just going to keep going up and up and up.
They should follow I believe it was Groucho Marx's suggestion to make a nickel worth 8 cents, and then a family could essentially live off that same nickel for the rest of their
lifetime. Yes.
So that's one up, one down. What else isn't up for 2026?
Well, if you're a GDP bro, we need more GDP, bro. The GDP, bro.
I'm a GDP per capita, bro, rather than a GDP in general.
But those,
sorry, if I may interrupt, Andrew, there's a great story about this that I think our listeners will appreciate. So 2 economists are walking through the woods and they see a pile of bear feces, and one economist says to the other, "I'll give you $100 to eat that." And so the other economist, he eats the bear feces and gets the $100, and then they're walking along a bit further and. Then they see another pile of bear poo, and the economist who ate the first lot said, "Well, I'll give you $100 to eat that." And so he said, "Okay." And so he takes the $100, and then they're there and they're talking to each other, and one of them says to the other, "Says, what have we really achieved? We've not made any extra. We've not made the $100 each. We've both eaten bear poo." And the other economist turns around and said, "Well, actually, that's not true. We made $200 extra for the GDP."
I do too. Frequent X. I also patronize X platform. That's all I share shit. So X. But that is a great point. Years ago, Walter Block made that exact same case. He's been on Swamponomics TV. I've interviewed him at least twice. I've interviewed for Liberation.com, and he's made that case too. That yes, great GDP, but if you build a massive ship, and that's going to add to GDP, but will it lead to long-term value if no one is using that ship? So GDP, yes, I 100. But the thing is that everyone relies on GDP. Markets run by GDP. If the GDP comes at 4%, the market's gonna go apoplectic and cheer that and be happy about it. But so that's why you have to follow GDP. I mean, I'm not a GDP person either, but people love GDP. But that said, all the forecasts have been revised up for the GDP. The Federal Reserve, that was a big thing at the December meeting because the Summary of Economic Projections revised its GDP forecast for 2026 from 1.9% in September to 2.3% for the whole year. So that was quite a big revision. Private sector forecast, they also say one big thing that's going to happen for the GDP boost is the one big beautiful bill, or OBBB. It's fun saying that. But anyway, so yeah, all the GDP forecasts, they're expected to be up. And 2025 was a good example of the volatility in GDP based on policy, because in the first quarter you had that contraction, which is driven by that record high imports. But then the collapse of imports led to 3.8% increase in GDP in the second quarter. Third quarter is also a big. Fourth quarter was okay. So yeah, GDP that's going to be quite increasing in 2026.
Okay, and so moving from a positive GDP, what's our next big loser coming down the pipeline for 2026?
Well, I hate to say it though, but I don't know. I'm so concerned about the whole AI bubble thing. I mean, compared to during the dot-com bubble, people did not talk about bubbles at all. People never thought that pets.com would be, or etoys.com would be the next big thing. So nobody talked about it. But now today, every single day are saying AI bubble, AI bubble. It makes you think, well, maybe there isn't so much a bubble because all these companies who are investing in AI have strong balance sheets. They're using their cash stockpile to invest in AI. But there's just something about it. I mean, this is a huge bull market. It's an ultra bull market. At the same time, it feels so fragile. It feels as if something is going to break any moment because of AI, because it's very circular too. I mean, it's not widespread adopted. You look at some of the numbers, small businesses aren't using AI. It's already a large corporation right now. The average individual want to pay for Gemini or, Grok? Will they be willing to pay as much money as they needed to justify the trillions of dollars in investment? Yeah. I think that's a negative just to monitor. Maybe it may not happen, but it's still good to keep an eye on.
I think the average consumer is not really the market, right? It's developing technologies that can be created along with the AI built into them with, I guess, options for upgrading not only the base operating systems that would incorporate AI, but also there'd be almost like a von Neumann machine, as it were, recreating itself again and again. But yeah, I don't think that they're looking for any of their market share through the consumer market, at least not directly, because people have AI in there. I don't know, they have AI in their fridges, on their light switches, on their TVs. And, I spend at least 20 minutes a day trying to remove all the AI things that get put on my computer without my knowing about it. And it's a chore, I tell you, it's a chore. But consumers, I don't think they're the primary market. They're not going to be paying for the AI, except for the cost of the goods that incorporate AI go in. But of course, as we know, the more that something is done, the cheaper it comes down, right? The prices come down on that. So what's the biggest thing that you personally are looking forward to in 2026, Andrew Moran?
Well, I'm going to have to say inflation, because if inflation does keep falling, let's say it goes to 2.1%, because Jerome Powell, he said that's going to peak in the first quarter. So if it goes to, let's say, 2% and aggregate inflation is not impacted by tariffs, then I guess you have to say, well, the whole economic data and research and commentary on tariffs may be wrong after all, because tariffs are supposed to be, they're supposed to push prices up. But if they're causing the exact opposite, where inflation is moderating at 2%, then you could say, okay, well, so tariffs may be a one-time price increase at least on the aggregate level, and two, that tariffs are not as persistently inflation as economists had argued for so many decades.
Oh, that is something to look forward to. Andrew Moran, Happy New Year to you. Thanks for being here.
Thank you.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.